Hi, good evening, everyone. My name is Shafir. I'm senior quantity surveyor working in Oman, currently in a development project. Okay. Today we are going to discuss about the budget and cost. How in a development project the budget and the cost will be developed and how it will be monitored. So here we will be discussing only in the high level of budget and the cost. So in the development stage, what are the development stage which we are looking at into any new project? Suppose if we have a project, hotel project. So what we have to do in the first? First, we have to do a master plan for that one. So after the master plan, what will happen? The feasibility study will be conducted. Whether that project is feasible in that location or not. For example, if we have a hotel project in a specific location, the feasibility consultant will inquire and will give you a report of the current feasibility of that project in that specific location. And they will advise how many rooms you should have, and in that how many rooms should be having a king suite, and how many should be standard, and how much should be the interconnecting rooms. Everything will be given based on the current market studies. And based on the feasibility studies and the master plan, a cost estimate will be developed. The cost estimate will be developed for what? To make sure that we have enough budget. So the master plan and the feasibility will be very in high level. That means per meter square, per square feet, or per development area. If you are looking at the infrastructure, it will be in that way. And after the cost estimate is developed, if it is fall within our budget, a concept drawing will be created. And from the concept drawing, and together with that concept drawing, we will revalidate the cost estimate again. And along with schematic also, we will revalidate the estimate. Then the detailed design will be developed. Detailed design means this is the drawings and the specification which is turned into the tender document. And apparently it will be turned into contract document after the tender process is finished. Now, how it will be formed? A budget, how it will be formed? There will be a feasibility study. Based on that one, an investment memo. Suppose if you are looking at a corporate one, we are going to invest in a hotel project. So there will be an investment memo prepared. In that, all the details of the project will be mentioned regarding the rooms, regarding the development cost, regarding what is the total budget, and how it will be, what will be the amount also will be mentioned. Basically, an overall budget will be mentioned that is based on the level 0. That means level 0 cost plan. This is developed from the investment memo. From investment memo, the level 0 cost plan is developed. From level 0 to level 1, cost plan will be developed from level 0. Then, based the time, we'll be having our master plan cost estimate, validation, concept design cost estimate validation, schematic design cost estimate validation, and detailed design cost estimate validation. And upon the end of detailed design cost estimate validation, the budget will be confirmed. That means what we have in the investment memo is the correct amount. If it is not, what we will do? We will do mitigation measures to reduce the budget or increase the investment memo budget. Now, how the level 1 estimate will be developed. Basically, the component of a level 1 is land cost, project management or development management budget, professional expenses, construction, legal, marketing, operator, working capital, pre-opening, financing, and contingencies. So we will discuss one by one. Okay. Now, when we discuss about a budget level, approximate percentage of allocation of the budget, in the budget will be working capital will be approximately 3%, operator fee, that is 0.69%. These are all approximate percentages which is been developed for one of our projects. So it may vary from project to project and depends upon the investment model also. So here PM/DM fee, DM is the development management, PM is the project management fee. Professional services, that is basically the design and supervision services. The legal, 0.14%. Construction, the majority of that when we come to the construction. You can see 74% of the total development budget is allocated to the construction. Marketing, financing budget, and contingencies. And land cost will be based on actuals. Now, what are the items under PM and DM budget agreement? Basically, suppose if you want to invest in a new project, a project manager will be assigned. Either it may be a manager from in-house, or we will appoint separate project manager or development manager to execute that project. So there will be DM agreement and PN agreement, and the business trips which is associated with that particular services, and direct staff's payroll and other expenses if it is a direct staff allocations. Coming to the second one, professional expenses. Suppose we have allocated initially the master plan consultant, design consultant, supervision consultant, geotechnical consultants, pre-contract cost consultant, and post-contract cost consultant, asset and facility management consultant, PM agreement, authority fees, any other specialty consultant. Here, the professional expenses may be having many other items like fire and safety, environmental, sustainability consultant, geotechnical is already here. So it will be vary from project to project and the project requirement also. Coming to the next item, that is a construction. So this will be based on our master procurement plan. How as a client we are going to execute this project. That means are we going to award all the works to a single contractor, or are we going to split into multiple contractors? That will be enabling works. That will be basically earthworks, excavations, backfilling, and piling or other sort of soil improvement works will come under enabling work. Suppose if it is separated and in our master procurement plan, we will allocate that as a separate item. Then main contractors works including PS and PC items, that means provisional sum and prime cost items. Then nominated subcontractors work, free issued materials, and direct contracts. So this is the construction major components. This is not limited. This will be based on our project requirement and our procurement plan. Legal. This is a budget allocation for the expenses, any legal actions from any parties, and we have to comply the compliance budget with the law for the project with respect to the country's law or with respect to the local municipality rules or panchayat rules. Then in case of any arbitration, we will use this as a allocated budget for that one, and DAP cost. In case of any dispute happen between two parties, this cost will be utilized for the dispute adjudication board cost. Now, coming to the fifth item, operator. I will explain you what is an operator. Operator, suppose if you see a hotel of Marriott in your location, suppose there is a Marriott hotel in Mumbai, in the Juhu beach. Okay, in the hotel, is the Marriott on that property? No. The client will be there. Marriott will be just an operator. He will not invest in the project. On the other hand, he will be paid for that during the construction for his supervision. That means while we doing our initial step itself, we will appoint a operator in case we are operating a hotel. So all the operator expenses which is related to the technical reviews of the documents, travel expenses, construction review and supervision, operation agreement for the project life cycle. So this all will include in the operator agreement. Don't get confused with the construction review and supervision. This is limited to the operator point of view, not in the construction point of view. Day-to-day construction activities will be managed by our consultants, professionals under the professional services. Now, coming to the next item, marketing and sales. There is a allocated budget for this particular line item. That means this will be used for advertisement and promotions. Fly-through experience. You can see some project, you can see the experience, fly-through experience before the execution of the work itself. So from the fly-through and CGIs, we can have the real-life experience of the project prior to the execution of the project. And sales offices, in the case we are executing a apartment building or the or villa project, if you have a sales team, then their cost will be coming under this cost. And for the project launching, that means that pre-opening and the grand opening will be part of this marketing and sales expenses. Now, coming to the seventh item, pre-opening. That means once the project is ready, suppose if it is a case of a hotel, there will be a pre-opening. Before the grand opening, there will be a pre-opening. This will give that proper training to the staffs of the for the operator, and recruitment and training fees, and their vehicles, and their soft staff accommodations, and their soft opening expenses. This will be covered for the period of at least 3 months before the grand opening. Sometimes it may go up to 6 months also. So pre-opening expenses are especially related to the hospitality project or theme park and water park projects, and any other items which will be operated by a third party. Now, coming to the eighth item, that is the working capital. This will be approximately for a 6 months period after grand opening. That means up to pre-opening, we have already allocated budget. Suppose in case of the project is not running smoothly in the first 6 months, that means they are not making enough revenue from the project, they have to consider a capital which is required to run the project for at least 6 months. This will include staff salaries, operation expenses, vehicles, staff accommodation, and soft opening expenses also. That means soft opening and grand opening will be having for the special ceremonies will be conducted, or special promotions will be there. All this will come under the working capital. Now, coming to the contingencies, this will be used when we have an unforeseen expenses which is not covered under the other budget line items. That means in case of extension of time, the cost for the extension of time will be coming under the contingencies. Suppose the contractor's price is more than 5% than our budget, then the 5% will be covered. If we cannot negotiate or we cannot make into that level, the contingency will cover that additional budget is required for that particular contract. This is the use of contingencies. Generally, this contingency, there are different priorities that will be this will be having allocated majority to the construction, because 75% approximately is related to the construction. So as it goes, when is the contracts are realized, the contingency will be shifted to the next items which is still not completed. So in this case, we will be having multiple entities which is managing the contingencies. Either it will be only with the managing director, or it can be split into managing director, commercial manager, and the project manager. So all this contingency will be used at their level of approval status. Suppose if they can approve a variations of 20,000, if the contingency limit is 20,000 for a particular person, he can use that one into his contingency levels. He can use it for his purposes. Now, coming to the financing budget. What is financing budget means? It is the, suppose if we are starting a hotel, which is having 284 keys, and our total budget of this project is say 26 crore Indian rupees. Do the client have the full money with him? Obviously, no. He will approach a bank to get finance for that project. Normally, there will be equity part. We will divide into two. There will be equity and a loan. If the equity and loan is 50-50, suppose if it is 50-50, there will be a fees which is to be paid to the bank for arranging that particular loan. For that purposes, this cost will be allocated as a budget. Suppose if we don't have a financing, we have full equity with us. In that case, this line item will not be there. Coming to the next item, level 0. What will be the cost level? How the cost, now we are talking, up to now we talked about the budget. Now we are talking about the cost. Cost means actual commitment against each budget line items. That means you can see it here under A, project PM and as DM fees, and the budget holder is development manager. Budget will be there, and a committed amount will be there, and a paid amount will be there. This will be the cost level 0, which will be used for our reporting purposes and our monitoring purposes. Each and every line items will be committed based on the committed amount, and the budget will be compared. And what if any difference it is there, we make transfer that extra amount to the contingencies. Or if we need additional amount, we may transfer from the contingency to the required line items over here. So this is basically level 0 cost plan. Now, when it's come to the level 1 cost plan, how it will be, we will see this is the level 1 cost plan. That means each line item will be divided into subcategories where it will be mentioned each and every item. So you can see professional expenses, it will be under PMDM expenses, SPV payroll, PMDM fee, business expenses, business travel expenses, it means. And the consultants, architectural design services, main consultant services, so on, so on, so on, so. I removed so many rows from there only for minimizing the screen here. Now, coming to the construction work, this will be based on our master procurement plan, enabling works, then lead contractor, main scope, and lead contractor portion sums and PC rates and nominated subcontractors. Apart from that one, we have some free-issued materials as per our master procurement plan. So these free-issued materials are sanitary waste and light fixtures, and other direct contracts are FF&E, OS&E, and signage and wayfinding. FF&E is the fitted furnitures and equipments, whereas OS&E means operation services equipments. That means all the refrigerators, all the kitchen equipments, all the kettles, all this will come under OS&E. And in FF&E, all the furnitures, loose furnitures will be coming under the FF&E. And others, this is the legal. Also, we will calculate how much we are allocated and how much we are paid so far. Everything will be mentioned here. Other one is the pre-contract, pre-opening expenses and contingencies and financing cost and working capital. And in the horizontal, you can see original budget, PTE, that means the pre-tender estimate, which is given by the cost consultant, and what is the variance, and approved budget transfer, a current budget, and over or under original budget. Then we'll be having the commitment status, contract number, awarded date, contractual start date, contractual completion date, company name, original commitment, approved variations, current commitments, and paid, balance committed, and balance from budget. So from this sheet, anyone can have a quick look on the projects and says that so far we have a budget of 25 million, 25 crore Indian rupees, and out of that we have committed 22 million, 22 crores Indian rupees, and we have paid them 18 18 crores Indian rupees. So this will be giving a clear-cut indications of our cost levels of the project. Then what will be the level 2 cost plan? That will be the individual BOQs which are there for each contractor or each consultant. So this is the level. Now we discuss first about the budget and second about the cost plans or cost plan level 0 and level 1. Now it's the time if you have any questions, you can ask now or we will leave the meeting. Thank you very much. Okay then, thank you very much.